Hey traders, in this educational video I will teach you how to apply Fibonacci retracement tool. We will discuss the logic behind this tool and then we will discuss multiple examples and I will show you how I use Fibonacci retracement tool in practice. Please don't forget to like this video and subscribe to my trading page. First of all, let's start with the theory, traders. The first thing to learn before you study Fibonacci retracement is the price action. Yes, the trading market, the market trading in a bearish trend, the market trading in a bullish trend, the consolidating market. Because the fact is that studying the price action, we know that in a bearish trend, the market is trading in zigzags. Yes, we see a strong bearish impulse, the retracement with the low high, then the next strong bearish impulse, the retracement again. We see the movement in such manner. And in a bullish trend, the situation is the opposite. We see a strong bullish impulse, the retracement with the high low, the next bullish impulse with the new high, and then the market keeps trading in such manner. Yes, we see the impulses and retracements. So then how do we apply Fibonacci retracement? The logic is that in a bearish trend, at some moment the market starts a correctional movement. Reaching some low, the market starts a correctional movement. We call such a correctional movement a retracement. And from some point at some point, this retracement will end, and from its completion point, we will see the next bearish impulse. And with the Fibonacci retracement tool, we are trying to predict the completion point of that retracement leg, right? I hope you got the point. First of all, let's briefly discuss, by the way, how exactly we draw the Fibonacci. When we identify the trading market, our task is to first of all identify the impulse. Our task is to identify the initial point of the impulse and the end point of the impulse. If the impulse is bearish, we draw the Fib retracement from the initial point of the impulse to the end point of the impulse. Yes, here how we do that. Yes, here are the common levels to apply: 786, 618, 50, 382. If we have a bullish impulse, the situation is the opposite. Imagine that we have a strong bullish impulse and the retracement like that. We will draw the retracement from the initial point of the impulse to the end point of the impulse. Yes, so drawing Fib retracement, it will look like that, right? I hope it is clear. And then watching this Fib levels from one of these Fib levels, we will expect the trend following movement. Yes, if the market is trading in a bearish trend, we will expect bearish continuation. If the market is trading in a bullish trend, we will expect a strong bullish impulse from one of these levels. And once one of these levels is reached, our task is to patiently analyze the reaction of the price to one of those. Yes, we analyze the intraday time frames. We are looking for some patterns there, for some breakouts. We're looking for the confirmation of the strengths of the levels that we spotted. So trading in a bearish trend, yes, we draw the retracements based on the bearish impulses, right? Doing it this way. And in a bullish trend, we draw the retracements relying on the bullish impulses. Yes, that is how we do that. Now let's discuss the examples, traders. Now let's open, for example, let's open S&P 500 index. Yes, and here, take a look what we have, traders. Here the market is trading in a minor bullish trend. You can see that from June we are trading here in a bullish trend. And reaching that high, the market started to retrace. Now we see a retracement lag. And here, relying on that impulse, yes, here is our bullish impulse, we can draw Fib retracement. Yes, here how we do that. And we have multiple Fib levels right here. And drawing these fib levels, you should look left at structure. You should check how the market reacted in the past to these levels. For example, you can see that the market is currently approaching 618 retracement. And you can see that in the past, the market reacted to that 618 level as well. It is the indication for you to watch that structure carefully. And on intraday timeframes, you should look for a confirmation to buy the market from that level. Similar situation with the 786. You can see that in the past, that area right here was very important. Yes, and even though the market respected the levels lying a bit lower than 786, still you can see that we got very important candle closes based on that level. So if that area is reached, again, we will consider that to be a potential reversal zone. And the situation is the opposite with the O5. Yeah, you can see that for now, the market kind of neglects that one. Yes, we haven't seen strong reactions from that level, so we take that away. Same thing with the 382. You can see that 382 retracement again hasn't been respected by the market participants in the past. It wasn't that significant, so we take that away. So, relying on the reaction of the price to these levels in the past, we identify two important structures to watch. And from these structures, we will look for buying opportunities. Now, let's take a look at gold. And here, what do we see? Similar to S&P 500 index, you can see that from July, the market here is trading in a minor bullish trend. Yes, we saw a very strong bullish impulse right here. Yeah, and then the market started to trade in a minor bearish trend. The market returned back to a bearish trend. We started to trade in a bearish trend. So we can take that bearish impulse, we can take that entire bearish impulse, and we can try identify the potential zones from where gold will resume this minor bearish trend. Let's draw the Fib retracement. We take that impulse. Let's add 3 to 2 into 5. And our task is to again look left at structure and check the reaction of the price to these fib levels in the past. Take a look at 3T2. Definitely looks very important because you can see that in the recent past, multiple times, the market respected that structure. Yes, we saw very nice reactions from that. So we will consider the levels around 3T2, that green area, to be a potential reversal zone. O5 right here is not important at all. You can see that the market participants neglects that structure, so we take that away. 618 again looks very important. You can see that just in the recent past, the market started to fall sharply from that structure. So we must consider that in our analysis. 786, not important. Yeah, even though we had just minor fluctuations right here, they doesn't look significant to us, so we take that away. So with fib retracement, we identified two potential zones from where the next strong bearish impulse may initiate, and we will watch these areas carefully for potential trend following trading. So traders, Fibonacci retracement tool is just a tool in your toolbox that will help you to identify potential reversal zones. We don't treat these potential reversal zones blindly. Once one of them is reached, we are patiently waiting for some kind of confirmation before we open any trade. I hope that my judgment is clear. I hope that you got the logic behind the usage of this tool. Let me know if everything is clear. Also, traders, please like this video and subscribe to my TradingView page.